How stock prices are determined. 3 words: supply and demand. So overall, it can be kind of confusing when you first come to the stock market and you see these prices just wiggling around all day on different companies and overall markets and indices. And the question you might ask is, how are stock prices determined? So again, it is all just based on supply and demand. So in general, as there is more demand relative to, say, a fixed supply, if there's more demand, price will go up, and if there's less demand, price will come down, assuming supply remains the same. Now, so for different stocks, there is going to be a certain number of stocks or of shares outstanding. This is the amount and the number of stocks that a company has. Now, while this number can change, assuming it doesn't, and assuming a company does not issue new stock, overall prices will change just because it's supply and demand. So what does that mean? So if on a given day there are more people that are buying the stock versus selling the stock, price will go up. Now on a different day, say more people are selling the stock versus buying the stock will go down. Now you can experience this firsthand, as I have, if you buy a micro or nano cap company. Now what this means is if you buy a company that has a very small market cap, which is the overall market value, generally expressed in numbers such as millions or billions, or for micro and nano caps. Now there are a couple companies in the trillions, but those are massive companies. So with my experience with buying small companies, if you buy into a company that has a small number and small dollar value worth of stock that's traded per day, if you go in there and just place a market order, which is placing a stock order just based off current prices you can get, and you set a order that is kind of large relative to the volume that's traded, you can drastically crank up the price. So personally, I bought into a company that was lower than a 400 million market cap, and I believe the volume was less than 20,000 a day on average. I bought something like $5,000, and I wanted to place a market order, but in this case, I had to set a certain price, and I just gave it some room so that the order would actually go through, and I, on my own, increased the market cap by, I want to say like 5% off $5,000 buying a thinly traded company. So there's a first-hand example of supply and demand. There wasn't a whole lot of supply of shares trading, and the demand on my side, I wanted to buy some shares, so I set a price and then it fulfilled, and I raised the price on my own. Now, does this mean that I added certain millions of dollars personally to the company? No, but because of supply and demand, and that I wanted to buy and I was willing to buy at a certain price, I increased the market cap through that, and therefore it changed the stock price. So if you guys have any questions, make sure to reach out and let me know what you think. All right. Thanks, guys.